All right, good morning, everyone. Welcome to this live intraday webinar on SB Trade Desk. We're just seconds away from the release of the second revision, or the first revision rather, for second quarter GDP, looking for a bump of 3.2%, 3.7, much stronger than expected. The dollar index is trading just below resistance, so if we pop through this, next target on the upside would be 12,012, which is the monthly open, but we're looking at resistance right here at 11,991. So the expectation was for a bump up from 2.3%, guys, to 3.2%. That came in at 3.7. Personal consumption also right in line with expectations. Core PCE, or the personal consumption expenditure, also right in line with expectations. So we'll see if that has enough juice to give this break of resistance. Again, we highlighted this chart yesterday on the radar charts, this confluence resistance for the greenback. Likely to get in a little bit more of a break higher here, probably test that 1202 or 1212 level, excuse me, on the upside. It's good to be with you guys this morning. There's a lot to go over. It's our last webinar for the week, so feel free, as always, to throw out those questions, trade setups you'd like to review. We've been mostly focused on the euro dollar. Yesterday, I put out a piece also on the British pound. Euro Aussie has been still remained in focus as well, much larger ATR. So we'll take a look at that. And some interesting levels on some of the futures or CFDs. So the Nikkei, German, or the DAX 30 also looking like they're at some critical levels. All right. So not likely to get a play off of this stretch right here, guys, but certainly on the crosses, let's go over what we've been looking at. So first up on tap is last night's euro dollar chart. So the primary directive here, as it were, was the fact that the confluence of that 200-day moving average was right pretty much in line with that median line off the lows from July and August. And that's kind of, we closed literally just below it, but well below the invalidation level for the bullish side of the trade near term. So the broader downside trade remains in play. We are looking for that base to give us a long play for the euro as it continues to respect the broader term ascending median lines, but near term or the immediate risk still is for a little bit more of a drawdown here. So here's what the daily chart looks like first. And then here's what last night's daily chart looked like. So we actually did stretch right into the bullish invalidation level, or the bearish, excuse me, invalidation level from last night. And that was right at 113.66, 113.67. The high was 113.63. Okay, and then we reverse right back below that 200-day moving average. And on a daily chart, on a broader theme, you still have the risk for a drop into 112 here, basically 112.10, which coincides not only with that 50% retracement, but the initial, or the highs rather, for the month of July, and the initial opening range high for August. So they both come in right around that 12.10, 12 figure to the downside. Momentum is at support on the daily structure as well, so we'll be watching this into the close. Here's what the intraday chart looks like now. So bullish invalidation got tested. We were actually holding longs when we released this piece last night, or I was holding longs when we released this piece last night. Just got taken out there at that initial bullish invalidation level. Happened a little bit later in the night, so I didn't have the opportunity to pull the short, but you did have a really nice short trigger there to put you back on the short side. Initial targets right back at the 200-day moving average, currently 113.16. And then right now on this stretch, you're looking for that target down at 1239, 1240, which represent 100% extension from the decline off the highs. A slight adjustment to the pitchfork also, guys. I just want to note, we were using the high in price. Remember, we were talking about this yesterday in the webinar. I'm not really a big fan of stressing or using stretch highs on massive outflows like that for Fibonacci extensions or for formations for that matter. We'll start by default using them, but as price action develops, we'll adjust where we need to. So if we adjust it to the close, 30-minute close candle high, it seems to be guiding price action just a hair better there. So near-term support, 1242, downside break below there. There's that 12 figure median line off the highs. And this is actually where I would start to look for long exposure again if we get down there. It's either a drop into 112 or a break back above 113 to really give us justification rather to start looking for long scalps or long triggers in momentum. Also keep in mind that we've been getting some divergence here. Creates a trigger break on the downside if you do break below 1242 and you see momentum drop back below 30. Might be a nice play back into the 112 handle. Oh, Deepesh, Eileen, good morning. Great to see you guys. Eileen says, Michael, your suggestion for watching the 1-minute chart for triggers has been a big help. Thanks for the heads up. Hey, you're more than welcome, Eileen, in this market environment specifically. Now, we don't want to get too lost in the 1-minute charts, like I said yesterday, Eileen, so we always want to make sure we have that 30-minute guidance for the key levels we should be targeting. But certainly for triggers, it's tends to put you in a little bit quicker. So here's what the near-term play looks like for the euro. So on a 5-minute chart here, you can see that the momentum signature ever since the decline or the break of the Tokyo lows, here's the first rally failing at 60, taking us back below 40. So the short trigger, or the short bias rather, still remains in play. The trigger that you just got right now is on this data print right here. Obviously, we're not going to start chasing that at this point, but you get the picture. So look for that 112.40 initial support followed by 112. Eileen says, yes, being mindful per you. Cheers, Eileen, anytime. All right, any other questions on the euro before we move off? Probably one of my most active trades over the last 48 hours. I am shifting the attention a little bit more towards Euro Oz. I thought that was going to make a more significant break of that key support. We're still holding below it, so the bias still remains there, but we kind of stalled out there. An overnight trade got me a little concerned. Still looking pretty good, though. So if there are no other questions on the euro, we'll move right across. Here's what Euro Oz looked like last night. Well, I guess we'll do that, but we'll jump into that before the pound since we just covered the Euro Oz, or the Euro dollar rather. So Euro Oz was a very similar setup as the Euro dollar in that it was just closed the session yesterday right above support. You know, we discussed this trade earlier in the week. 158.30, the high day close comes in at 162 and change, 162.24, and that was really the range that we need to see clear. The overbought signal quickly recovered, and you had some more downside here if we break below 58.30. Here's what the daily looks like on Euro Oz. Keeping in mind, guys, much larger ATR, 250 pips on a daily basis. So if you're newer to the strategy, or just testing your feet on scalping, it might not be your best setup to get involved with just because it has a little bit more ramifications on the wrong side of the trade. But for you guys who have been actively trading this, it's been a beauty. So this was confluence resistance, former upper median line parallel. This also is the highs from 2014. And the weekly opening range low for Monday's nasty spill to the downside. Oh, excuse me. Tuesday's recovery. It was the recovery low, and then again yesterday we tested it. Here's the break. Momentum still has a little bit more to go before you even test 60 or that support trigger, and the downside remains in play. Here's what Euro Aussie looks like on the 30-minute. So we discussed this yesterday. This thing was coming right into the bullish invalidation level, the high day close, 62.24. And there's that 58.30, 58.55 level added yesterday. That's just an extension off the highs here. So I'm not really stressing that blue level, but we're going to use that zone as near-term resistance now. On this, I wanted to leave it for the webinar to show you. Again, if you bring it into a little bit more of a shift formation, which essentially pitches the pitchfork right to trendline resistance, gives you a little bit better guidance on price. So that would take us basically right here. Sorry about the delay here on the computer. All right, takes you into a little bit more of a proper slope for what we're trading in. Still below this region, that's going to be our bearish invalidation level. So as long as you hold below that, you're looking lower. Near-term targets to the downside, 155.60 into 55.90. Here's what the 5-minute looks like on Euro Oz. So the only triggers that actually worked out last night were this. And I'm sorry, guys, I have to actually keep drawing the triggers every time I come in the webinars because I don't actually transfer the my live trigger charts every day as I do the charts that we use in the webinar. So I kind of just come in here and add which ones were operative. But this was the only one over the last 24 hours that was really a compelling trade. This was earlier today, just before the webinar. Again, I didn't really want to precede the data by trying to get into a position, but I just wanted to highlight, again, multiple probes into oversold territory, turn ahead of 60. You'd need to see that break sub 40. And again, against that 55.30 or 58.30 level, we'll continue to look lower in Euro Aus. If we break through this, okay, if somehow Aussie starts to really sell off harder again, and you break through this, this would invalidate the immediate short bias, but you still only are looking to play the range. And that's what we highlighted on Monday's piece. It's just the focus on this continues to be this range until we really show a little bit more of a conviction break. Any questions on Euro Aus? Again, you're looking about 60 pips per scalp here should suffice, so just keep that in mind. Okay, moving right along. Last but not least, from yesterday's highlighted setup is the British pound. And this is a doozy. So actually got stopped out at break even on this trade last night. As I noted in the report, I was actually holding along from the lows here, looking for a 30 pip stretch. And that would have taken us, or the initial resistance target we were initially looking for was 55.28, which is just a soft target. The risk is still for a move back into that 55.90 level as this holds. 55.47, 618 extension, 54.61 is a 618 retracement. You had former median line slopes here, which are also offering support and a topside trigger and momentum. So all the hallmarks for a near-term rebound. The rebound fizzled out pretty quick though. Here's what it looks like. First on the daily. Okay, there's that key support. Not only did you have the 618 retracement and extensions, but you also had the 100-day moving average, which is right in that level. We closed just above it. And the rebound is what we were scalping yesterday. The broader bias was weighted to the downside, and that was very clear below that 55.90 level. Okay, it's just that this fizzled out pretty quick. It was a half leverage trade, break even, no harm, no foul. The only unfortunate part is that the turnover took us out of the longs instead of putting us into fresh shorts. So looking at the initial target coming in right now, this is just a soft target, the 611 swing low, that's 54.19. Next major key support comes in at 53.58, and that's the July low day close. Okay, down here, bearish invalidation now gets dropped. Whoops. Now gets dropped at that 55.30 level we were targeting earlier, which is just a swing low. And a really nice pivot in price, actually. Also note that this retracement now has no bearing because a new low has been made. So we'll have to see a little bit more signs of a recovery at the lows. You're getting some radical divergence right now, but maybe this trigger break would give us conviction to tack on a new retracement. Till that happens, broader short bias remains in place up 55.28. Here's what the scalp looks like on the 5-minute chart. So looking at the momentum signature since the spike high that you made in early Tokyo, and again, we were on the long side here, trigger break not only took you off the longs, but then this thing crashed right through the Tokyo opening range low, right? Momentum couldn't make it above 60, drop into oversold territory, still pretty bearish. So I would expect a recovery, by the way, on these trades at some point heading into the close of the week. Okay, so be cautious if you're just initiating new shorts. Be cautious on that. And one of the reasons for that is, what you're looking at with the dollar. We looked at this early in the session. Still struggling to get that through that 11,991 level, which is, again, a really nice pivot in price. But if you go to the daily chart, it's going to be pivotal to see if this closes here or not. Even if it does, you get a stretch into the dollar and a pullback. That pullback would be the nice recovery to start playing, again, the long side of the euro for a little bit of a rebound. long side of the pound for a little bit of a rebound. If we close above it, the bias is in play until it's invalidated. And a couple of guys were tweeting at me yesterday saying, Mike, if the broader picture should we be looking for a euro long? From the swing side of things, you've got a much larger stop to work with, so sure. From the scalping side of things, it's very different because we don't have that luxury, putting a 40 pip stop or even a 50 pip stop on some of these trades. So trying to call the low, why? We're better off trend as your friend. And I'm absolutely on the side of looking for a euro entry on the long side, 100%. But I would be much more comfortable doing that after dollar has shown us some more resistance against either 1212 or that 1280 or that 11980 level, this region here, or you get a little bit more of a key reversal taking you back through that 200-day moving average, which has been a nice pivot in price as well. So immediate bias, immediate risk is still lower in the euro. Using that pullback to look for some entries on the long side near 112 seems to make sense. Even then, you would be looking to play within the confines of this formation, okay? And until that's invalidated, until momentum breaks 60, see a resistance break of the formation you're in, I'm not going to try to call low, right? I'll continue looking to play the trend. Questions. Daniel says, I think you've got the next few days figured out. Nice analysis. Hey, Daniel, I appreciate that. And again, it's not about figuring out. We're not unlocking a code, right, Dan? We're just looking for opportunities to take little nibbits of the market. We're not looking to play the entire range. We're not looking for the 100, 150 pip plays. If you're in a great position and you get a good entry, guys, and the market's running, by all means. We're not stupid. If it's a 35 pip is the target and the market shows a clear breakout, I'll ride that for 150 if we can. But in the meantime, as we hold these tight formations, we've been long the euro this week. We've been short the euro this week. We were long again last night. Unfortunately, like I said, we missed that trigger into 1367. That was an ideal entry. So shorts right now should be looking to clean up the desk a little bit near 112.40, 112.42, and then a break there, which we're testing right now. You're looking for that drop into 112. If you're not in this trade, no chasing at this point, okay? It's not our style. Never going to advocate that. We'd be looking for a little bit more of a support bounce, look for an opening range break into the US trade, but coming into an interesting level of support. The most probable scenarios, Dan, exactly. That's what we're looking to do. Exactly. Just positioning yourself to take advantage of market fluctuate. That's it. It's guys who try to turn this into a huge science and, make it a little bit more complex than it needs to be. Although I guess some people would find this complex. All right, so I want to leave it open to your questions, guys. Again, we have time here if you have any questions or trade setups you want to throw out. Chintan says, can we look at sterling yen along with cable? Yeah, absolutely. So again, there's cable. Checking out that, what was that, the 611 low, swing low? We're checking that as support right now. Still don't like the fact that we have divergence, so I can't really advocate initiating anything new here. Near-term resistance is going to be right what key support was yesterday. Okay, and it's namely 54.50 into 54.60. Huge range, 200-day moving average, former slope resistance. We went over it. So if we do get this thing sub 30 again on the 30-minute candle, remember, as long as this condition exists, sub 30, the market has propensity to keep going. And in fact, that's when the acceleration to the downside or to the upside on an overbought condition is the most prominent. You can see the bulk of the move that we saw yesterday. The bulk of the move was as momentum was in oversold territory. It went from 56.27 right into the lows. And it's not till the recovery above 30 that you start to get any meaningful upside. So remember that dynamic, guys. And this whole, the market's overbought, I need to buy, throw that out the window. It's not going to do you any good, okay? If you're talking about a daily chart, even if you're talking about a daily chart, I can go over a chart right now. I'll show you dollar yen on a daily basis. This thing has the propensity to stay in overbought condition, oversold condition for months on end. Okay, just last year, for the entire month of September, you were in overbought condition. Look what price did. One of the sharpest moves of the advance. From late November all the way into the start of December trade, or from late October, excuse me, to start December trade. Again, we spent the entire month in overbought condition. Sharpest move of the advance. So I want to warn you guys, just, looking for a low is prudent, and definitely, if we respect the longer term trade, sure, but when something's an overbought or oversold, that's not when you want to start trying to fade the move. So the same thing on the British pound here. Okay, it looks like we're going to drop back sub 30. I'd be looking for that drop near, 53.60 would be my next downside target. Like I said, this is going to be the July low day close and the former median line for that same structure that we're following off the highs. All right. So pound yen, my friend, looks like this, Chintan. The level of support that I was looking at yesterday and highlighted, let me take a step back. My problem with pound yen is that pound is pretty volatile enough. It's well known amongst the trader community as a professionally traded market, and it's notorious for these breakthroughs, false breaks of support, throwovers on resistance, and yeah, you're at a support structure, but we've already, massacred it as far as trying to get a precise beat on things. So loosely speaking, 185.36 into 185, 184.90, these highs here. Key area of support near term, you're looking at the median line from the highs of the year. You're looking at a 50% retracement for the 2015 range. Okay. And they all coincide right here in this region. So to the close below this, Chintan, would validate a real deeper spill in sterling yen. My concern is that you get a little bit more of a prominent rebound here. The opportunity to get short, in my humble opinion, was right here yesterday. Really clean support, or resistance confluence rather, that held like a charm, right? You overshot it by a couple of pips, but you have a very, very wide ATR here as well. From a scalping standpoint, it's tough. I'd like to get a more prominent rally to get back on the short side, or see a new low. A drop into 82.90, 82.88 might actually prompt some nice long exposure. So loosely speaking, that's what I would say I'm looking at. Chintan, here's what the sterling yen looks like intraday. And again, you can see that key support, how messy it's been. So if anything, I think this thing is coiling up for a move, and I think you get some sort of corrective action soon thereafter. Here's the low, higher low. Obviously the stretch, I hate using that for anything, but just really more of a consolidation in my humble opinion. We'll have to see. Not something I'm operating on, not something I'm trading at all right now, Chintan, but for your consideration. Hope that offers a little bit of a clearer picture. Look for a rally back into that median line, or possibly even the median line off the highs. But oh, sorry about that. But the point being, you need to close sub 85.30, 85 level to really get the conviction to continue lower. He says, okay, sir, thank you for the views. Anytime, man. I wish I had more conviction on this one, because I know it's a very popular pair. It is my trade of the year for daily FX. We were looking to buy a major pullback into the start of 2015. You got a decent pullback. The breakout is really at risk now. It's really at risk now. And if we break lower, specifically this region, sayonara. I mean, you probably look for a move back towards 180. So it's very possible. The momentum signature certainly looks like we're changing behavior. From overbought condition, we were holding 40 as beautiful support early in the year. Brief dip sub 40, 60 hold, 40 break. This is, the hallmark of a near-term turn in momentum. So I'll wait for a little bit more clarity here. And I do like the dollar yen short, so I can't fight this. I can't fight this. And the sterling dollar, we're also looking lower, so it's kind of the biggest of the two losers, right? Here's what dollar yen looks like. Who is that asking? Kyle says, dollar yen, please. Coming right up, sir. Here's what Yenski looks like. You're testing, or you're coming in some near-term resistance, and that's basically the closed lows that you made for July. which also come in. Hello, stop traffic. One more time, 200-day moving average right on line with the median line off of the highs for the year. So not touching this. I'm looking for short exposure. Mark, I see you in the room today. McDowell, good to see you, man. So we've been following this member since the start of the week. We were chatting on Twitter. There's that level finally coming into view at 120.80. It's been a long, hard grind, man, but we're there essentially, right? So we'll be looking for, possible resistance into this region. It's awesome in the fact that, a couple things that you want to take into consideration, guys, when you're looking at these scalps as well is, yeah, I'm not one who's going to be a real big stickler for, dollar yen, euro dollar is moving up. That's, dollar weakness, so I'm going to short the dollar yen. But it's interesting to see the behavior. And despite the advance that you've seen in the dollar versus most of its major other counterparts, dollar yen has really struggled to take part in that with the same amount of magnitude. Yeah, we've seen a nice, decent rally here. But percentage-wise speaking, right? You take a look at something like sterling yen, or not sterling yen, the euro yen that we were looking at, or one of those two, where you're seeing a little bit more of a larger range, euro Oz. Um, it's kind of fallen under the radar for a lot of people. Momentum, testing 40s resistance, price action, a little bit higher to go near term into that median line structure. Okay, what would put us bullish? Very simple, 22 break on the upside. Why? Well, 2201 turns out being the weekly open and the March highs. 2193 ends up being a 618 extension off the highs for the year. So you got clear-cut targets on this thing, no matter which way it goes. I'd rather be looking for a decent rally to sell per se. We've been looking higher ever since the start of the week, and this has been the target we've been looking for. So it's been, like I said, a real tough, slow grind. But as we get into this target, any long exposure, you want to start taking some of that off, bringing your stops up to break even or better. If it does break higher, 122 is on tap to the upside. Where's a good fib to use on dollar yen daily, says Andrew Smith. Yeah, I don't know, which is why I haven't put a retracement on this, man. I don't like using those lows. Don't get me wrong, I will always do something like this throughout the course of the day, just to check to see if any major fibs fall on the levels that we've been watching. So if you do this, look where the 50 comes in. We're watching that level anyway. Don't need this fib. Look where the 618 comes in. I'm watching that level anyway. Don't need this fib. So just for the sake of keeping the charts clean, I won't necessarily tack this on. Another reason I'm not really a big fan of it, because you got no reaction whatsoever at that 38.2 or even the 236 for that matter. So it gives you very little conviction on this. If you take it into the close low, a little bit more of a conservative approach. Look where the 50 comes in. I'm watching that region anyway. Look where the 618 comes in. I'm not necessarily watching it, but this is the broader bearish invalidation. So once that gets broken, I'm sure we'll have another high-low high to play with to give us the extension. Andrew, does that make sense, man, of how I'm like kind of working through these spikes? Just keep in mind, there's so little price action that happens at those levels. They're very emotionally driven. So I don't want to, necessarily factor in that key low on on too much of my analysis if I don't have to. Right now, I'd rather be working on the assumptions of this extension here, which covers the yearly highs. And again, that 618 is right in this region either way. So near-term resistance being tested now, maybe a little bit higher into US trade. We'll see if that holds. If you get some compelling short triggers, it might be worth a stab. Topside break beyond that, you're essentially looking for the 122, 121.83 handle. At this point, also, this 618 retracement, which has been compromised to the downside, becomes null and void. So we'll clean that up. And that would be your topside risk on a break. Near-term support, we already tested it today. That's 119.80 into 119, or it's 82 into 88. on the near-term chart. We just simply pivoted off that trend line off of last week's decline. Any questions on dollar yen? ATR is still pretty healthy for dollar yen. Remember last week, guys, the start of the week, the ATR was like 13 pips or something. It was ridiculous. Nice and juicy here at 33. So, keep that in mind if you're getting into any intraday positions on this one. Kyle says, thank you, Mike! Exclamation point. Cheers, Kyle. Hope that helps, man. I like it. I like it. The advance is coming into an area of resistance. We'll be watching that into the open of U.S. trade. Andrew says, thank you. You're more than welcome, Andrew. Always good to see you in the room. All right. So a real quick look at some of the commodities, and then there's some of the CFDs that we were just talking about yesterday. You might have seen me tweet a chart of the Nikkei, and I just wanted to highlight this real quick. Okay, so the euro, or the dollar rather, did make it through 11,991. Momentum breaking to overbought territory ahead of the U.S. Open, 1212 rather, the open for the month, and a little bit more of a key resistance for the dollar. It bodes well with that dollar yen pushing into a little bit more of a high, right? Euro pushing a little bit more into that low that we were looking at. Looks pretty good on a lot of these setups, guys. It just depends on whether we trade or fade coming into an area of support. If dollar breaks through and euro breaks down, could see some real fast acceleration to close the week. But base case scenarios, you start to see a little bit more of a waning in momentum on some of these. What was I about to look at? The Nikkei. So in overnight trade, I was looking for the rally to actually extend a little bit more. This is the region of resistance that you start to look for a major either key break, okay, in a V-shaped recovery, or, by the way, just for your information, guys, most recoveries, actually, if you look back, 90% of recoveries happen in V, or the bottoms on the back of these major spill in equity markets tend to happen in V-shape, literally 90%. So don't, obviously the advance will typically take 3 to 4 times the amount of time that it takes to decline. So, keep that in mind. You're never going to really bounce right back to that same level. That being said, you have the 200-day moving average, really big confluence. The median line off the yearly highs, the 50%. I think this is the extension, no? 50% retracement from the decline. Again, using that low, so I'm not really a big fan of it. But all of those coincide in this region right around 1960. So it gives you a little bit more conviction that we could see some more upside on risk. Even if you look at the SPX, I don't really have much resistance there either. Obviously, you guys are going to want to default on that, but here's what the resistance looks like. 1980, 1978 seems to be a nice big level of resistance. You had the lower median line parallel off the lows, 618 extension off the highs, 50% retracement from the yearly, or the advance rather, from last year's October low, all come in right here. So again, momentum still a bit more of an upside play. As markets rally today, look for that to start to fizzle out towards those levels. One other chart, guys. I know we talked about the pound. I hate to keep going back, but one other chart I just wanted to show you yesterday. This was highlighted on the piece I put on Daily FX yesterday. It's not really relevant for us for scalping, but I just wanted to show you again. We are now making a massive outside weekly reversal candle as momentum continues to fail into those highs. So look where we're testing support. This is a weekly chart. Is that sliding parallel? We're right there. Median line off the low, right? So adds all the more conviction to a possible real nasty spill here. Momentum turning over ahead of 60 after a sub 30 break. It could really be rougher times here for the pound if we break if we break beyond this on a weekly close basis. So beyond that, the gold trade that we've been following is another one where essentially you've failed miserably at its first major key resistance hurdle, and that was right here at 1155, 1151. We broke higher. We did test the upper median line parallel almost to the pip there before reversing, but watch this week's close. Again, if it's an inside candle at the highs, I really think we made an outside break. Yeah, so it's not going to be an inside candle, but look, we're momentum reversed, right? Not a good sign for the initial rally here in gold. So it's interesting to see where these commodities are playing and where risk is at, because if we have that stretch higher and you see some pullback on the S&P, it's going to be interesting to see how the dollar reacts and gold alongside that after this horrible, you didn't even get a day of relief. Here's what the daily chart looks like for gold. It just slammed right lower. So we had the right idea on the upside with that target coming, like I said, right at the 618 off the high rather. The upper median line parallel dating back to the late highs we made last year and the yearly high for this year. It just looks too perfect, right? Resistance failing at 60, back sub 50, not a good sign. Not a good sign. So you look back again for that former trendline resistance to be, or former support to be resistance, and as long as you stay below that, you're still bearish on gold here. I do expect that you'll see a drop into that 618, then a recovery near term, but a new high, it's tough to justify. We need to see risk really start to turn over a little bit more aggressively. Mark says, oil looks strong. Dollar CAD broke under 132. Very shallow move up on GDP, looking lower. He says, never mind. What happened in dollar CAD? I've kind of lost interest in dollar CAD, and especially, guys, from a scalping standpoint or a near-term intraday standpoint, I don't want to mess with these pairs that are, I told you this yesterday, I don't want to mess with these pairs that are in like fresh multi-year highs. It's just such a far out stretch that you don't really have reference points to make for near-term targets. Yeah, 1376 is what I need to see a break below, Mark. Former high day close. This thing has been dilly-dallying around this median line for way too long for me to feel comfortable playing. Yeah, I mean, I don't know. I have no clue what's going on with this. If anything, I just feel like it's going to chop up more people. You're continuing to get ongoing divergence into the highs here, but it's not a reason to try to fade it. At the same time, with where the dollar index is, do I really want to push along? Let's see what the near-term chart looks like. Andrew says, good call on sterling Oz resistance at 220.78 yesterday. I wish I had taken it. We'll take a look at that in a moment. Andrew, thanks. Appreciate that. Here's dollar CAD. Yeah, so not only is that 31.76 that major key level, it's also, roughly speaking, the opening range low for the week. And like I said, for the long side of the trade, looks like you just got a trigger there not too long ago. There's nice some divergence into the lows here, followed by trigger break. So I see the long justification. It's just from a sheer level standpoint, clarity of the ascent, clarity of the formation, technical clarity in general is just not there. Just not there in my opinion. Okay, wait a minute. Might be onto something here. Adding validation or further conviction on that 31.76 level as being the 1618 off the high. That'll be the bullish invalidation level near term. So you're basically constructive on the trade while above that confluence region heading into US trade. Um, that'd be a sort of key near-term resistance. Weekly opening range high. Here's the weekly open, 618 off the high, and upper median line parallel. So I actually don't want to really even stress this formation anymore. I'm going to get rid of that. That's what you'd be working with near term here on dollar CAD. Um, recognizing that it's still a range, guys. 31.76, the highs that we made for the week. Try 33.50. Buy near the lows, sell near the highs is the way to play this until we clear the range. A breakout here would validate at least buy the dip mentality, at least into this high. And again, I'm not someone who's going to start positioning for a longer term breakout from these levels. If you're interested in playing the longer term breakout or the longer term upside in dollar CAD, you need a much more compelling entry than this. So interesting setup. Mark says, I will stop asking about it. Nah, you don't have to, Mark. I'm playing with you, man. It's just not something that's been on my menu for a couple of days, essentially since the breakout that we saw earlier this week. Um, once we cleared that high day close, it was kind of hands off for me. So Sterling Oz for Andrew. Here's what the scalp looks like. The daily looks, well, let me take a step back. We're testing a support confluence right now, or a median line confluence. If you take this thing back, the formation that we were working with off the lows for essentially the 2014 swing lows, this is a shift formation. And you take a sliding parallel off the high that you made there in July, you can see that caught almost to the pip. The February opening range high for 2015 was resistance in early July. And here it is acting as support, former trend support, or channel support, excuse me. We dilly-dallied around it earlier in the month, but there it is again. Here's what the scalp looks like on Sterling Oz. Oh, I don't have one. Let me zoom out a little bit. Okay, here's what I'll do. So just some rough levels for you if you're trading this, Andrew. The high day close comes in right here at 2037. That's going to be the bearish invalidation level near term. And support, really clean actually, right at the highs there for last month. Initial opening range high for this month. This right here is the monthly open. I know the levels are a little bit stacked up here, guys, but it's a huge, huge range. Daily ATR is almost 300 pips. Those are the major key levels I would look to play. I don't actually have a near-term setup on this, but the turn was pretty big. 22.17, 21.76. This was huge. This is the level that we talked about earlier in the week, right, Andy? Pretty massive, pretty massive. And as long as we have that whole day, the high day close in play as resistance, will favor the downside. Recognizing again today you're getting some near-term support, so kickback here, you'd probably be looking to sell that. A quick update on Euro Pound. We were looking at this early in the week as well. I actually did have a piece on this on SB earlier in the week. I think it was on the Sunday Post. Correct me if I'm wrong, but just wanted to talk about it real quick. Guys, we noted yesterday that 200-day moving average has continued to hold the close since the spike advance into confluence median line resistance. And as long as that holds, the risk is for a little bit more of a drawdown to the downside, and that's exactly what you're seeing. Yesterday, you did close below that 73.20 support barrier. Here we are pushing even deeper below that median line. So the risk If we close here, or if we close below this today, the median line would be for a drop into this zone. And that gives you a lot of further down, or a lot more downside to go here before this thing finds some support. This will be last month's highs, a 50% retracement of the advance just of the week here. Again, not stressing this retracement, but you also have those slope lines that we've been following for a few years now, coinciding right in that region. So you're basically looking at like 72.38, 72.25. A break and close back above 73.20 is needed. At that point, you would want to target the 200-day moving average, but this is really sort of the thing that's been capping the close here since the advance that we saw earlier in the week. So quick update on that. Here's what the scalp looks like. Real clean opening range, at least for the week. Snap those lines real quick. Okay, so the range lows for the week actually come in at 72.40. Near term, 72.70 is sort of what you want to be looking for. Downside break momentum has been looking like it's failing. 40 hold, 60 break, but brief. 40 hold, now 50 hold. Here's the 40 break. So near term, if you do see a break back below 72.70, look for that spill into like 72.20. This confluence region we highlighted yesterday. And again, let me just test, see what the extension looks like here off the high. So again, further highlighting that low, 72.62, 72.70. Really tight. My only problem with this, and it's very hard to actually scalp because you don't really have all that much room as far as your stop's concerned. The best way to trade this one is on that 1 minute chart, Eileen, you were talking about, to start up the session for a real quick opening range break. If the opening range turns out being larger than a 20 pip play, which it looks like we're going to set up for that right now, it's not even worth playing, guys. This one's good when you get really clear-cut triggers. Like the long trigger that we got here was exceptionally clear. And in fact, even the short trigger you got off those highs was a decent play. Other than that, you want to be really picky with this just because the ATR is a little bit tighter. They're pound pips, as we noted yesterday, so it would be a little bit more of a bigger hit if we get it wrong. So just another setup that's in view. All right. If there are no other questions, or if you do have questions, guys, please feel free to throw them on the note box here. Graham says, Michael, an untried idea to save you redrawing triggers on FXM trading station market scope. When you change computers, have you or anyone tried using a Dropbox sync Candleworks layout folder? Graham, that actually sounds like an awesome idea. Unfortunately, security features here in New York are, or at least here in 55 Water, are like through the roof. So there are actually none of the computers in this entire building, I think, have access to Dropbox. They used to, but they locked that down real quick. So great idea, but Dropbox, all those syncing programs are cloud-based storage things. They don't really allow them on these computers. Eileen says, haven't been working with the Euro Pound, but see what you're saying, right? So again, Eileen, I'm not a big fan of it either from a scalping perspective. You know, I typically over the years have called this the grandpa trade just because of the tightness of the ATR. But when you come into key levels and the technical clarity is there, you know, who cares what I think, right? If the market's offering something, let's listen. That looks pretty good right there. Further adding a little bit more guidance there to that downside around 72.27, 72.22. I'm sorry, 72.22. Bernard, we went through both of those. I can bring them up again if you need to take a screenshot, man. So here is my quick levels on the SPX. Again, noting that the downside obviously overshot like crazy. This, by the way, not only is it all those things that we talked about, former median line support and all that good stuff and all that jazz, but it's also the yearly opening range low. So you really need a conviction push through this thing to recover some of the lost confidence, some of the lost momentum that you got on the downside. But those levels I'll be looking at. Bernard, as far as the German 30, median line off the high, 618 retreat, 618 extension off the high. Nice confluence region there. Takes in 10, 4, 12. A little bit more upside, I think, before you start to turn over again. But unfortunately, excuse me, I do think you get some kickback on some of these recoveries that we've been seeing over the last 3 days. So just some food for thought there, Bernard. He says, thank you. Have the screenshots now. Cheers. Right on. All right. So again, quick highlight watching the U.S. dollar. Probably going to get that run up there into 12.12. We'll see if the U.S. session opens that up. Look for resistance there. Topside break there pretty much invalidates the bearish bias, in my humble opinion. You've invalidated all the levels of resistance you'd expect to see hold if this is going to be a deeper recovery for the dollar. So shorts on the euro, watch out for support. Shorts on the sterling, watch out for the support. Euro Aussie, make sure we hold below that near-term resistance to maintain that downside bias. Otherwise, if we do break through, continue to look for that range right into the high day close, which we've been eyeing since the start of the week. Guys, I want to wish you the best of trading for the next 2 days. I will see you on Monday for the public webinar on Daily FX, and we'll be back here on SB Tuesday, Wednesday, and Thursday for the intraday strategy webinars. Have a great weekend, and I will see you next week. Cheers.